let us know and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, I've posted a chart here of a crude oil chart. This comes from one of the more expensive futures advisory services that we have out there. And I'm not putting this up here to say rightly or wrongly. I just want to show you the difference in approach. That's all I want to do, and that's all I want to plan to do. Now, as you're looking here right now, you know, what you're seeing here is the market has broken down below the parallel channels. And, you know, this parallel channel on the upside really doesn't fit very well. That's the main thing. It fits really nicely for a while here with the things, but even then it's a little bit lower. But what you see here, it goes up and touches that parallel line right here and then closes real low. And they're saying, you know, really much, much lower prices in the crude oil. And that certainly can be. There's no question about it. But we've had just about a little more than a $6 rally here in crude oil. Here's where we were. I'm going to go through step at a time, okay, so we can see where we are, because it's just a difference in approach. You know, I'm just looking at different charts from a different time frame to see where you might find a pattern or supply, demand, whatever it is. But you can see here, we had the beautiful 382 retracement right here. We sold off quite a bit. We went up and we made a higher high by one tick right up in here, making that 382 valid again. And then we came down and we actually made a double bottom down here. We took out this low by about 60 points and we went to a double bottom. Now, when we're watching these things, what we try to do is to go down to a 15-minute time frame to see if there's anything there. And I sent this yesterday here in the room, and I had some comments on it, so that's why I'm repeating it, because they wanted to see it again. So I just wanted to bring up the 15-minute here, and you'll be able to see crude oil here on the 15-minute basis. And there it is over the last several days. You can see the 382 retracement here, and then when you make the ABCD down to this level, that ABCD, folks, measured to 75.36. The low was 75.27 on the right-hand side over there, within 6 ticks of the exact move, and we rallied here. In fact, we went above all these highs here today, and I wanted to bring that to your attention too, because that is important, because I sent a video out early this morning saying, hey, be aware of this, because we might be seeing something that is really quite dramatic here in the crude oil complex, and so we should pay, you know, very, very close attention to it. So what I'm going to do now is to bring it up here and show it to you. I'm blowing it up so we can see the last 5 weeks. You can see it easy. It's a daily chart, and I blew it up so that we could see it without too much trouble. So hold on one second. There we go. And here we come. And now you'll see what I was saying here. We were down here just below, right around $80 a barrel here. I said, watch this level right here at 82.31. I said, watch that level very closely. Well, the high was 82.36, and we've already sold off 80 points off of that 382 from that level. Whether that means anything longer term, I don't know. All I'm looking at is a place where I have to enter a trade and know exactly what I'm trying to see when I'm, you know, putting the risk on. That's what it's all about. It's not how much money you make. It's how much money you don't lose. And that's the real key, you know, to doing these things as we see this. Now, we've just made a new high on a recovery high. This is not a new high, but we've taken out the highs of the Dow Jones Industrial Average by just a small amount. I think it was 10 points. Well, no, actually, it's a little more than that now, because we're trading above 34,000. So that's 300 points higher than the 61% retracement, folks. And here we are at the S&P is now trading really close to that 40 handle. We sold that at 40.16, And it looks like we will be stopped out here in just a few pips here, making a little bit, leaving a lot on the table. But again, we don't know which ones are going to work and which ones aren't. And so we've got to be really careful with these and keep our losses as little as possible. Now, as I mentioned on the beginning of the show here, the day after Thanksgiving has the highest percentage of closing higher of any of the 255 trading days of the year. It is out of sight. It's 76% of the chance of the market closing higher the day after Thanksgiving. Now, if it doesn't close higher on that day, that is a negative bias, and you have to remember that because we've had some really bad days the day after Thanksgiving on a Friday that didn't good. That following week was not very kind to stocks if the market closes lower on Friday, especially if it closes sharply lower. And whether that happens or not, I don't know. But you know what, folks? Nobody else does either. And that's the whole key to this. It's not how much money you make. It's how much money you don't lose. Now, there's one, by the way, our guest today will be Jeff Huge of Alpha Insights. Always interesting to see what Jeff has to talk about. But I want to get over here and talk about the gold market here for just a second. And we'll get it up here. 1 second here. Whoa, there we go. There we go. Okay, here's the gold. And now this is on a shorter term basis. We made the high here. This has Friday's action in it, right up in here. Now we made the 382 retracement here. We made another 382 retracement here. And then the market came down and rallied back up and made another 382 retracement up there at 1747. And so that was a trade that we put on this morning. At the same time, I was sending that video out on the crude oil. I was sending this video out on the gold, selling to sell December gold. But you should be switching your operation over to February gold now, folks. You could go one more day if you want, but starting Monday, make sure you're trading February gold and not December gold, because you're going to see pockets of illiquidity into December. February, you shouldn't see that because it's very actively traded. So I think it's important. It's very important to me, folks, because in 1980, when the market topped on January the 8th of that year, February gold was a spot gold. It was limit up at 800 and, oh dear, I forget what it was, spot gold was 865, trading about $60 higher. February was trading at a big premium because the prices were so high and interest rates, the carry was so big. It was well over $900 an ounce. But far out December gold for 1980 was limit bid way above $1,000 an ounce. And I think I've told this story before. I called up Goldberg Brothers and asked Richie, who was in the pit. And he said, well, there's not many people out there. He said, especially out there, past October. And I said, is gold still limit bid? And he said, yes. I said, sell me one limit up. And he said, Larry, he said, you're one of our best customers. Don't do that. You're going to lose. And I said, Richie, how long you been on the floor? And he said, about 6 months. I said, Richie, sell me two. And so he comes back with the field. He's here, SA. You know what smart A means. And I said, Richie, now here's what I want you to do. I want you to buy two of them, limit down. And he said, they won't even take that order. I said, oh, yes, they will. And believe it or not, folks, a little more than 2 hours later, I got filled. It went from limit down to limit up to limit down in a matter of about 2.5 hours. That was a big day. 877-927-6648. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're back, and as a little Thanksgiving token to everybody, I'm going to show a trade that looks really interesting. If you like trading in the direction of the trend, this would be your game. It's a 15-minute chart on the euro over the last several days, and as you can see from this chart, right where we're speaking right now, we're sitting right at a 382 retracement of that high, and that fulfills an ABCD. It fulfills a little 3 drive to a top pattern, and of course it makes the 382. Your risk on this trade is 15 pips, roughly $150. So you should make some money on that. And if you're wrong, you can tell Ebenezer Scrooge that Larry put you up to it, because sometimes they win, sometimes they lose. We don't know for sure. That's all we can do. Now, I want to go back into history, folks, because to me it was extremely important in my life. On the November the 22nd of 1963, I was taking care of my grandfather up in Chicago. He had had a heart attack, and he was recovering nicely. And we were sitting at the kitchen table, and we saw the news when Walter Cronkite came out and said the President of the United States had been shot in Dallas, Texas. And then the conspiracy theories over the next, 59 years have just kept going higher and higher and higher. Folks, most of you know that I don't do any guns anymore, and I've got a few guns, a couple of machine guns and some rocket launchers, nothing serious. Little joke, boys and girls. But I used to many years ago collect guns. I never killed anything with not even a squirrel, nothing. I just never liked that stuff. But I like the mechanics of the guns and the history behind them and stuff, especially Western weapons. However, in 1960. Shotgun News, which was the biggest thing back in Terre Haute, Indiana, to all the farm boys and hunters, Shotgun News sold all kinds of guns, okay? And they sold guns from World War II. One of the guns that they sold was a 7.62 Mannlicher Kekano, which is a German knockoff made by Italians. In other words, it was a Mauser bolt action, okay, and it was a rifle, just like the one that was the name of the rifle that Lee Harvey Oswald used. But they said he shot this, and there were 3 shots fired within 2.6 seconds. Folks, that gun was so poorly made that even when it was working, you couldn't hit the broadside of a barn with it. from 50 yards away, because when the bullet came into the chamber, it wiggled. It wasn't set properly. I mean, the workmanship behind the Mauser knockoff was terrible. There is absolutely no way in the world. Maybe Oswald, killed him with another gun, but he didn't kill him with that gun, because that gun would not hit that far away, especially a moving target and using bolt action to get 3 shots off. They did all kinds of, things with the Army, showing that even with an Army with their best marksmen, they couldn't get them off in 5 seconds, which they were supposed to get it off in 2.6 seconds. But that's all. You never hear about that anymore. But I can tell you, just from personal experience, that gun did not kill him. The bullet might have, but that gun didn't kill him, because that gun was the worst made gun in all of the World War II. It didn't even have a second place. It was so bad. So anyway, the reason why I'm telling you this is what happened was the Dow Jones that day, with President Kennedy being shot, 10:30 in the morning, the stocks were moving. The Dow Jones was down 30 points. Now, you might think that's not very much, but the Dow was trading just under 600. So 30 points was, a pretty substantial move. And so that's why it's, that's why we're looking at stuff like that. So anyway, that's neither here nor there. And I don't want to go into the conspiracy theories, because I watch that stuff, and, I heard about the Zapruder film. I don't want to go about that. I'm just trying to tell you that when you see these things that happen in the news, this was a bull market going on. The market was closed on Monday or Tuesday the next week for the funeral and stuff, the procession. And then from then on, the market kept going higher and higher and higher. That was 63. And then we went all the way up to 1,000, if you remember, in 1970. 71, 72, and then in 73, the market hit, I think, 1,103 and 1,103, and from 1,103 went all the way back to $470. That was my learning experience. $470 Dow points in October of 1974, and then a double bottom right at December of 1974, and from there it went to 40,000. So that's just the history of what's going on. When these cycles turn, they go up a great deal. So I'm just bringing this to your attention only because history is around, and it was a very sad day. And those of you that probably weren't around, because, talking 1963, you have to be 60 years old to even remember that stuff. But it was really memorable, in my opinion. And the things that I'd like to share with you now is why it was so memorable is because I was with my grandfather. And then on Sunday morning, we were watching, Lee Harvey Oswald being transferred to to another jail. I don't know what it was. And then out of the crowd comes Jack Ruby with a .38 caliber revolver and shoots him in the stomach, and he dies a few hours later in the hospital. And right before that guy jumped out, before Jack Ruby jumped out, my grandfather said in Italian, I can't remember the exact Italian because I've forgotten it, but it was basically, I hope somebody comes out and shoots that SOB. And by golly, that's exactly what happened. And I was thinking, I wonder how many people were out there saying the same things. And of course, anyway, let's get moving on to something else. But anyway, that was a very, very, very important part of my life, because I remembered it so very much. The main reason was I was in medical school at Stritch Medical School at the University of Chicago, and I was in my second month, and I didn't want to go back. And I told my grandfather, I said, I don't want to go back. And he said, your mother's going to be very upset. And I said, yeah, I know. He said, but she's not living your life. You are. He said, do what you have to do. And of course, I went on in graduate school and stuff. But my mother didn't speak to me for 6 months when I did that, because long story. Anyway, that's neither here nor there. We'll go on to the next one. We will have Jeff Hughes as our guest. We are making higher highs here, folks. I don't know. We're not anywhere near major. We're still at 382s in the S&P. We're still at 382s in the NASDAQ. We're way above the 618 now in the Dow Jones. But remember, the Dow Jones is only 30 stocks, and they're price weighted. They're not cap weighted. So that's the main thing of what we're watching here to doing some of these things. Okay, let's see what else I had to mention here that I thought was relatively important. I mentioned the gold was doing relatively. Oh, Bitcoin. I wanted to show you Bitcoin here, folks, because we're getting very, very close to a major bottom down here at around 10,000 to 6,000 in Bitcoin. Here's the long-term picture of this. I've got two of them to show you because one of them is a non-log chart. That's this one. And the next one I'm going to show you is a log chart. I get this one from Stan Harley. And if we hold this up here, we'll probably try to have Stan on Friday if we can. Hold on here. You'll be able to see it. There we are. And this is a log chart. Going way back here, see, we've had hardly any correction. Actually, when you look at it from a $10,000 mark, when you look at it on a log chart, the correction is not very much. So even at 10,000, that's a, if you owned it at 100 and it's trading at 10,000, you got to be a happy camper, and it is trading at 16,000. So that's why you're watching these things here. Remember, this is an 11-year chart, folks. So it's not a bubble. It's certainly not a tulip bubble. 877-927-6648. Stay tuned for the huge man. Alpha Insights, Jeff Huge.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Jeff Huge of Alpha Insights as our guest today. Jeff, are you there?
You do indeed have me, Larry. Happy Thanksgiving.
To you and your family, too, and everybody over there in Minneapolis. You're in the Minneapolis-St. Paul area?
You know I am.
Okay, listen, what are you looking at today? I'm looking at a put-call ratio that looks pretty high.
Well, it's an interesting chart, isn't it? Normally a new high like this would mark a low in the market, right? But occasionally they actually illustrate what the smart money's doing. And so we normally would ignore the daily volatility, but tend to focus more on the 12-month moving average, which we've illustrated here on the bottom of the chart. And 12-month moving average would normally tell you that anytime you're above that green line or very near it, it's good buying opportunity. And when you're down around the red line or below it, it's good selling opportunity. And so, we're thinking that at this point, the 12-month moving average isn't indicating that there's a sell opportunity here. And so the spike that we saw in the equity-only put-call ratio probably suggests that the smart money is doing something. And we called around to a bunch of desks on Wednesday of last week, or actually Thursday of last week, and said, hey, what the heck was going on? And one of our contacts on an options trading desk that we've known for many, many years indicated that he has it on good authority that one entity did some major buying in put options on several of the most popular tech names. And he actually speculated that it might have been Michael Burry of the Big Short fame. Now, coincidentally, Burry actually tweeted out on Tuesday night the following. He said, quote unquote, "You have no idea how short I am." And then on Wednesday, he abruptly deleted his entire tweet history. So, I think that's kind of interesting. It's possible it's Michael Burry buying shorts on, a bunch of tech names, or buying puts rather on a bunch of tech names. But, he's actually done this in the past. He bought a huge notional value put bet against Tesla last year, and that bet actually went against him. I heard that he got out of it with minimal damage, but he's right and he's wrong sometimes. So we'll see. Maybe he's the smart money. Maybe he's the guy doing this. We'll never know, but it's worth looking into, right?
Yeah, well, sometimes you'll know, sometimes you won't. Sometimes they'll tell you, sometimes they don't. Jeff, I can promise you one thing: it was not me. Okay, so you can scratch me off the list on that. Okay, let's take a look at your next chart. Also looking at the open interest in the put-call ratio. What are you seeing here, Jeff?
Yeah, this comes from a Bloomberg article very recently, and what they indicated is there's been a lot of angst over the idea that put open interest is at a record high. So that means that everybody's bearish, right? And therefore, if everybody's bearish, everyone can't be right, and so it's a bullish case. And so I looked into this a little bit further, and as it turns out, call volume is also at a record high. And so the red line represents record call open interest, and the black line represents record put open interest. And the bottom line is the blue ratio of the two. Mm-hmm. And if you look at the ratio of puts to calls, it's been declining steadily for the last year, and it's actually at its lowest level in the last 2 years, which suggests that people have been hedging less and less and less over the course of this last 2-year period. And if anything, they're probably more terrified of missing a big rally than they are of being caught in the next big drawdown based on this data set.
Mm-hmm. Okay. Now, the next one, of course, is the Elliott wave theory. And I'd like to, because you're an expert in this, I want to let the folks to give you your impression of what we're looking at here with the Elliott wave. I can see some counts that you have here. And then I have a personal question when you're done I'd like to ask. So please go ahead.
Yeah, let me just tell you, I've got 2 counts that I'm looking at with a high degree of conviction. The first is on the left. It's called my preferred count. And in this count, we're actually counting the action from the January 22nd high to the June low as being primary wave 1. We can count 5 waves down, and then we count 3 waves up into the August high, and that's primary wave 2, which suggests that we're in the midst of primary wave 3 down, and it looks like we're in the very early iterations of that. And if we're right about this, wave 3 should begin sometime in the very, very near future, I would think within the next couple of weeks at the very latest. Now, if we're wrong about this count, it's possible that rather than tracing out a big impulse wave down, that the market is changing or has changed to kind of a zigzag pattern in A, B, C for its initial leg down. And so the alternate count kind of highlights that the decline into the June lows was probably just primary wave A, and that the next iteration beyond that would be a B wave. And B waves tend to be, they tend to take time. And so the initial move up into the August highs wouldn't be enough to satisfy a primary degree B wave. It would more likely be a flat pattern that's a lateral consolidation, which means that the August high was probably just intermediate wave A of that primary wave B, and that the October lows were probably intermediate wave B. And if that's the case, then we're in the midst of intermediate wave C up, which should retrace about 61% of that decline off the January high into the June lows. And if we do hit the 618 retracement exactly, that would take us to S&P 4364, and that should mark the top of primary wave B. What would follow that high would be a significant decline, primary wave C down. And so the two counts basically have the exact same outcome over slightly different periods of time, and it's just a slightly different iteration of how these counts work. We put make or breaks out there, so if we get above 4325, we'll know that the count to the right, the alternate count, is active. And if it breaks above 4637, then we'll know we're just wrong, and we've got to go back to the drawing board.
Okay, well, that's good to do that. Now, the question that I have, Jeff, is, we have a Dow Jones that is basically price-weighted, not cap-weighted. And here we have the Dow was setting, as we closed on Friday, exactly at the 61% retracement of the January 4th high. And now we're 300 points higher than that based on, some of the real expensive stocks in the Dow. But do you factor the different of the four stock indices, the Russell, the Dow Jones, the NASDAQ, and the S&P, do you factor all of those together, or do you weight one more highly than another?
Yeah, I don't think the Dow is a great representation of the broad market, but it's not something I ignore. In fact, one of the reasons we're looking at this alternate count is because I think that's the count that the Dow is in right now. And it's oftentimes the case when the Dow and the S&P disagree, because the Dow is only 30 stocks and the S&P is 500. And the weightings, as you mentioned, are dramatically different. The S&P has about 25% of the stocks in the S&P 500 are tech stocks or something like that, and the Dow doesn't have that sort of emphasis on tech. In fact, the largest weighting in the Dow is United Health Group, which is a healthcare insurance stock. So completely different sort of basket of stocks. In fact, that United Health Group is a very defensive stock. And so it doesn't surprise me that the Dow is doing better. It's more of a value defensive index.
Listen, we got to pay a few bills. Could you stay with us for another segment? We want to talk about your preferred counts. We'll be right back, folks, with Jeff Hughes of Alpha Insights.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, and we're talking with Jeff Hughes of Alpha Insights on preferred counts and short-term options. You want to tell the folks what you're looking at, Jeff?
Yeah, so Larry, we laid this thing out, and we're thinking about this idea that, our preferred count suggests we're going to go substantially lower, right? And so there's two options short-term for the market. Number one, we topped at the 61.8% retracement on November 15th. That was intermediate wave 2. So in other words, the decline off the August 16th high was intermediate wave 1 down. The rally to the November 15th high was intermediate wave 2, and we're already starting down in intermediate wave 3, a primary wave 3 down. And the way we'll know that is if we break below that rising trend line off the October-November lows. I think that'll be the first hint that our preferred count is correct. Now, if the market takes out that November 15th high, then that means that we're probably going to retrace the 78.6% level, which comes in around 41.47. That would take it would fill an unfilled gap that dates back to around September 12th, and in my opinion, that would complete the count. So, that's our short-term option, basically.
Okay, now the next one is a Performance Food Group, and this must be an ETF or a stock?
That's a stock, yeah. Performance Food Group, symbol PFGC. They're a company that delivers food to restaurants and hotels and movie theaters and gas stations, places like that. And so they're a food distribution company. The stock has been acting very, very well. It's put in what I would describe as a classic pattern base formation. We haven't taken too many liberties with drawing the lines, but it's a clear base that is on the verge of breaking out to a new all-time high. If the stock breaks out above $60, then we could count a measured move to about $82 initially, and then $101. I think for your investors, if they got a 1 to 3 month time horizon and they like to put on swing trades in stocks, they could probably buy this stock on the breakout above 60 and set a stop loss at 55, and that would give them a solid 4-to-1 positive risk skew to our stretch target at 101.
Well, that's very, very good, and that you want to know what your risk is whenever you're trading. That's good. Now, next chart we're going to be looking at is the chart that we have showing you the what's happening with your actual performance, and that has been absolutely spectacular. You want to tell the folks how you've been doing here?
No doubt. We've been fortunate to put up positive absolute returns this year. In fact, we're up over 25% over the last 12 months. Beating the S&P, which is down 15%. Now, our win ratio is only about 38%, so a little more than 1 in 3 of the stock recommendations that we make actually is a winner. But our winners are up around 16%, whereas our losers are only down about 6%. And so, the key is cutting your losers short and letting your winners run. And even if your win-loss ratio is less than 1, which, most of the time it will be, you can still make good profits in the market. And so that's what we focus on, is just having a profitable trading book.
Jeff, if I could get you to repeat that 10 times in a row to people, I hope they would sometimes realize that you're right 1/3 of the time, and yet you're making 25% so far, in a year where everything else is down. I mean, that's just an incredible. This is what the textbooks teach. Keep your losses small and let your profits run, and you're doing right at that's an amazing statistic.
Well,
it really
George
is.
Soros put it this way, Larry. He said, it's not how often you're right or wrong that matters. It's how much you make when you're right and how much you lose when you're wrong.
I think that's absolutely correct. Now, you've got tell us about your free monthly newsletter, how the folks can take a look at it.
Absolutely. So go to my website at jwhinvestment.com, and in the middle of the menu bar, you'll see something that says free newsletter. If you click on that, it'll take you to our newsletter, and you can subscribe for free. Just stick your email address in there and press subscribe now, and we'll deliver it to you on the first Saturday of every month. The next one we publish will be December 3rd, and in that newsletter, we're going to go through our outlook for the economy, a big deceleration in earnings growth in 2023. We'll go through all of our technical models, and we'll also lay out our year-ahead forecast for 2023. So it's a great opportunity just to kind of get the full big picture from us, and that's what we named the newsletter. It's called Huge Insights, the Big Picture, affectionately. And, we often get emails from people, Larry, every month, and they say, Jeff, we love your big picture views, but how do we put this to work? Give us some ideas. And so we created this optional membership level. For $10 a month, you can sign up to become a member, and then you get our top actionable stock idea every week. We email it out every single Wednesday at 1 p.m. Eastern time. And, that's basically what our performance track record's based on. It's all those recommendations that we provide our members.
Well, listen, you're doing a great job, and I want to thank you for being as a guest. We'll have you on again, not this month, but next month we'll have you on for sure. And have a wonderful holiday with your family, Jeff. You deserve your time off.
Thank you. Same to you, Larry. Take care now.
Okay, you bet. Jeff Huge, folks, Alpha Insights. Okay, folks, we've got the market still continuing to go higher. Those of you that are interested in doing that chart with the euro that I was talking about, that came in at 102.95. We're now trading at 102.98. If you see a print of 103.05, that would be a loss of $100. I would say sayonara at that point. Right now it's out 3 pips, and I would not risk any more than 10 pips on that. We just made another, we're now more than 400 points up now on the Dow Jones, I believe right now, or close to it, because I see a trade just went at 34,042, and that's 300 points above the 61% retracement, folks. And, we're not even at the 3/8 true retracement on the NASDAQ. So there's a bifurcated market, as Mr. Basil Chapman would say. So it's going to be real interesting times here with this volatility that we're having here. And I think it's fun to watch, what's going on. Especially take really eyes on the crude oil, folks. We had a fib point up there, the 382 at 82.32. The high was 82.36. And so far, that's got at one time it had a 70-point pip profit in it. Right now, it has a 55-point pip profit in it. If we make a new high above there, we would say sayonara in that and not even stand in front of it. So keeping our losses as small as we possibly can. And we've been short gold from the 1747 level last night. Beautiful 382 pattern. We're now trading at 1739. And remember, let's get this up here to take a look at it when we come back from our break, because we've got a really big number here that we have to watch very, very closely here in this gold market. And we'll talk about that when we get back from our break here. I'll put it up on a 4-hour chart so we can see it even better. And then we'll get back. And when we come back from our break, we'll talk about this gold chart that we're going to be watching here to see what would be the next move here in the gold market. So we'll be right back after we paid a few bills here, and hopefully I've got this thing set up for the timing of this thing, and it's not as easy as you might think getting all these things lined up as well, but we'll be right back after these few words from Mark.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks. I posted a daily chart of gold. I wanted you to see, we had that big ABCD double bottom down there at 1618. Hard to believe it hit 1618, isn't it? And then you can see these were equal moves that we had here. Right up here, we got up to 18 and change, and now we're coming down. And this is what leads us to the next chart that we're paying very, very close attention to, and that is this gold chart. And you can see where we saw the 382 retracement here. Last night, I posted that in the video, and it said that we're probably going to get up to that level and start down. And so far, it's got about a $900 profit in it. We're looking for it to see if it'll get here to a 16. Let's try it again, Larry. 1725, 1726. That's the 382 of the low from 1618. Now, if you believe in Fibonacci numbers, and if you believe in 382s, if you believe in 1618, by golly, you got to nibble at it there with a $5 stop. I mean, that's mother, God, and country, for heaven's sakes. You don't know whether you're going to be right or not, but just a $5 risk in something that's trading has a market value of $175,000 and you're only risking $500, you're not going to play in that game very often with that kind of risk-reward ratio, folks. That just doesn't happen. So pay very, very close attention to that trade. It may or may not work, but by golly, if it does, it's going to be a really low risk-reward ratio trade. And, those are the ones that you want to look at. I just saw a trade here at 0.5 in the euro, so there's a $100 loss. Unfortunately, you'll have to have spam for Thanksgiving, but we'll make it up in something tomorrow. Possibly we'll find it. It's going to be really tough tomorrow because it's a shortened day in a shortened week, in a holiday week. I mean, you really shouldn't even be trading in the month this week in Thanksgiving. We didn't do that in fact, I didn't trade during December at Drexel. We'll be back tomorrow, folks. 877-927-6648. May God bless.